Thanks for the question, and it's a real pleasure to be here this morning. So, as has been mentioned a few times now on this panel, the geographical diversification and the currency diversification are two key reasons that clients could consider an offshore bank account, right? And in the prominent global markets, so in the US markets, in the UK markets, in the developed markets, which is generally where we turn to in these kind of geographical diversification perspective, we've been faced with more than a decade of very low interest rates. And so essentially what that means is that if any cash deposits are parked in an offshore bank account, they're probably earning an interest rate that's very near zero. And if we then think about that in the context of inflation, so long-term inflation in these regions is likely to trend between 2 to 3% per annum. And what this effectively means is that any cash that's held offshore, which isn't being worked harder than that, is effectively losing 2 to 3% of its purchasing power every year. And so that's why investing becomes really compelling, because what you'd look to do ideally is invest in assets with a higher return potential so that we can help reduce that inflation erosion and then actually grow the funds over time. And then further, maybe taking a continuous and long-term approach, so having the additional benefit of compounded returns, which is also a very powerful force. So if we think about this in numbers, just to make it really real for the audience, if we had a pool of $1 million, let's say, of cash available in an account today, if we invested that money in a portfolio that earned 4% above inflation, that portfolio would be worth about $1.48 million in 10 years' time. But by doing nothing and retaining the funds in cash, that same $1 million would only have a purchasing power of maybe $730,000 in 10 years' time. So I think that's the reason, quite simply, that inflation is a compelling argument. It really does make sense. But as has been alluded to previously, I think it's important to take a step back and really understand what we're looking to achieve, because investments are simply a vehicle to get there. It's all about the client's goals ultimately. So I'll start with that, and then maybe delve in deeper as you progress.
Oh,